It's Wednesday, the 3rd of November 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael. Did you have a win yesterday?
I did not. I suspect you're about to tell me that you did.
Only reason I asked the question.
I thought that might be the case. I'll find out a little bit more about how much you won. I'm assuming it's not a lot because you still turned up this morning.
That's right. $2 each way doesn't get you much.
No, it doesn't, but it's just nice to have a win. There's plenty to talk about this morning, Sean. The Reserve Bank indicates monetary policy will tighten from now, but rate rises are still some time away. That's our main story. Also today, the UN Climate Change Summit gets some momentum. New South Wales opens right up for the vaccinated, and the story of one of the biggest companies in the country that most of us know little about. Then stay listening for Sean's chat to Stephen Halmarick, Commonwealth Bank Chief Economist, about yesterday's Reserve Bank board meeting. Sean, it was the most anticipated RBA board meeting in a long time. There were expectations that the central bank would begin its move to tighten monetary policy, and then it actually happened.
Yes, the Reserve Bank finally fired the starting gun, saying it will stop targeting the April 2024 Australian government bond rate. That means it will cease trying to keep a lid on 3-year bond yields, which actually flow through to fixed lending rates. The reason is because inflation is higher than the bank thought, or in Reserve Bank speak, the way it puts it, it said it's made earlier than expected progress towards the inflation target. But this race, Michael, is a marathon, not a sprint. The official cash rate target is unchanged at 0.1%, and the central bank isn't giving too much away, saying conditions were unlikely to be right for a rate rise until the end of 2023 at the earliest. The statement released after the meeting said the board was prepared to be patient, and afterwards Governor Philip Lowe said predictions of a rate rise sometime next year had pretty much jumped the gun.
All right, so what's the prognosis then on the economy?
Well, the bank said that the local economy was recovering from the Delta outbreak and businesses were hiring again, with the unemployment rate set to hit about 4.25% in a year's time. That's pretty good. It expects growth this year of 3.5% and 5.5% next year. While inflation has picked up, it's still low, the Reserve says, and it's lower in Australia than many other parts of the world. Governor Philip Lowe said there hadn't been the big jump in labour force participation in Australia, unlike other economies, and supply disruptions here weren't as prevalent. There's still a fair amount of uncertainty around wages, which is the critical indicator of when the bank will move on interest rates, and it's worth noting that the Reserve Bank welcomed the prudential regulator's recent decision to increase the interest rate serviceability buffer on home loans. That's the one which means you need a greater buffer before you get a loan. Clearly, the Reserve Bank is somewhat worried about house prices.
So how did markets perform in response?
Well, the Aussie dollar slipped back a bit. There's been so much talk since last week's inflation data about price rises that many analysts thought the central bank might do more. And so when it inferred there wouldn't be a rate rise until at least late 2023, the Aussie dollar fell. Bond yields fell. That means investors were in the market buying the fixed income assets. Equity markets liked the commentary and jumped higher after the 2:30 p.m. announcement, having traded sharply lower earlier on. Low interest rates, broadly speaking, make equities more attractive relative to bonds. However, by the end of the session, the S&P ASX 200 was back down 0.6%, which was pretty much the level before the announcement. Now, on the market, real estate investment trusts did best, while materials, financials and energy stocks underperformed. The sell-off of Westpac shares continues, with the bank down 2.4% yesterday after Monday's more than 6% drop. The other three major banks also fell back yesterday, as did Macquarie Group. BHP, Fortescue and Rio Tinto, the big three miners, all dropped by more than 2% as iron ore prices fell. Iron ore is now trading at its lowest level since September on the back of Beijing curbing steel production.
All right, and what about overseas markets? What's happened overnight?
Wall Street is higher this morning. While there's plenty of talk about inflation and what the Federal Reserve will do when it meets tonight, earnings remain strong. The Dow Jones Industrial Average, S&P 500 and Nasdaq were all up around 0.3% in early afternoon trading. European shares were mixed overnight.
We'll be back in a moment with the rest of the day's business news. Sean, after a pretty rocky start, the United Nations Climate Change Summit in Glasgow is starting to pick up some momentum.
Yes, hopes that some of the big emitters would agree to phase out coal-fired power stations were dashed over the weekend, and Brazil and Russia really haven't come to the party quite yet. Also, China's President Xi Jinping isn't there, robbing COP26 of some of its star power. However, there has been some good news as momentum for change builds. Nations that represent 85% of the world's forests, including Brazil and Indonesia, two of the really big ones, have committed to halting and reversing deforestation by 2030. More than 100 countries promised to ban the practice. Forests absorb about 30% of carbon dioxide emissions. Also, India, one of the globe's biggest emitters, has committed to carbon neutrality by 2070. That was a bit of a surprise. The Rockefeller and IKEA foundations announced plans to create a global energy alliance for people and planet to help poorer nations transition, while the Bezos Earth Fund, of Jeff Bezos fame, has pledged $1.5 billion in programs. And of course, yesterday morning, Queen Elizabeth II urged world leaders to rise above the politics of the moment. The 95-year-old monarch, in a recorded message, said she hoped leaders could work together for the sake of future generations.
And back home again, Sean, New South Wales is heading back to normality, it seems, after Premier Dominic Perrottet brought forward freedoms for fully vaccinated people.
He sure has. From Monday, Michael, dancing is back.
Fantastic. Sorry, that was a bit of sarcasm there for you, Sean.
That's right. I don't think either of you or I care about dancing being back. However, we'll go with it. Also, there's no limits to the number of visitors at home. There'll be no rules for gatherings of fewer than 1,000 people outdoors. Businesses can move to one person per 2 square metre, and capacity settings will be removed for major outdoor facilities such as stadiums, zoos and racecourses. Work from home rules are also under review. However, it's bad news if you're not vaccinated. Only when the vaccination rate gets to 95%, or on 15 December, whichever comes first, will unvaccinated people be allowed normal freedoms. The current vaccination rate is 88% and 94% have had one dose. 95% is also the point when you can stop wearing masks on public transport and in shopping centres. In terms of case numbers, New South Wales reported 173 cases yesterday and 4 deaths. The number is up from Monday, but fortunately the state hasn't experienced the spike that was expected as a result of reopening. There were 989 new cases in Victoria yesterday and 9 deaths. 81% of that state's population over the age of 16 is now vaccinated. The ACT recorded 8 new cases yesterday and its vaccination rate is now 93%. And across the country, nearly 89% of Australians have had one vaccine jab and 78% have had 2.
Yeah, that's good news. Goodman Group, Sean, has upped its profit forecast for this financial year, capping a pretty remarkable run since the COVID pandemic. Its share price was up more than 6% yesterday. It's a good day.
Sure was. I often talk about Goodman when we run through the performance of the largest stocks in the country. It's the 11th largest company, a touch smaller than Telstra, but bigger than Fortescue, Transurban, Afterpay and Coles. Its share price has steadily climbed over the past decade, though COVID pretty much supercharged that run. Yet, many of us don't know much about Goodman. The company mostly buys and sells industrial real estate, which in an e-commerce world where people need storage and distribution centres is a great sector to be in. For example, Goodman built a 200,000 square metre robot-run warehouse in Sydney for Amazon. It has what real estate investment trusts want. It has high occupancy rates, strong rental growth, and solid investor appetite. Now, this is the second time this calendar year that Goodman's upgraded its outlook. It's just a really hot stock at the moment. It operates in Australia, Hong Kong, China and Europe, and with a market cap of $42 billion, is easily the biggest of the real estate investment trusts.
Sean, what's making headlines in today's news media?
Well, the Financial Review is reporting that the Commonwealth Bank will allow its customers to hold and use Bitcoin and other cryptocurrencies via its banking app. It will make the Commonwealth Bank the first Australian bank and one of a handful worldwide to offer customers access to cryptos. The Sydney Morning Herald is reporting that New South Wales Premier Dominic Perrottet has ordered a review of processing for awarding taxpayer-funded grants, following former Premier Gladys Berejiklian's ICAC appearance. No surprise there, really. And the Financial Times is reporting that Pfizer has more than doubled its forecast for COVID-19 sales this year and overall expects to generate $36 billion this year and $29 billion next year. Pfizer really has become the dominant global vaccine.
Running through some of the other stories around today, wealth administration group NetWealth has made a $785 million bid for competitor Premium to merge to form a group managing $94 billion. However, Premium, now that's Premium spelled Praemium, rejected the offer, which was at a 29% premium to Monday's closing price, saying it undervalued the business. Premium's share price jumped 15% yesterday.
Inflation expectations fell slightly over the past week, somewhat surprisingly, but the ANZ Roy Morgan Weekly Consumer Confidence Survey says expectations remain close to 7-year highs. Inflation expectations really matter. If people think prices are going to rise, they're more likely to ask for a pay jump or dole out more for goods and services. Expectations effectively become reality.
IAG's share price fell more than 6% yesterday after the insurer downgraded its margin guidance. In essence, the cost of the large number of storms and severe weather events have really eaten into profits.
Sure have. And Michael, most of us haven't heard of TELUS Pharmaceuticals, but its share price is up nearly 700% since its low in March last year. Yesterday, the group said the Therapeutic Goods Administration had approved its prostate cancer imaging product, triggering another decent jump in its share price. It's still awaiting approval from healthcare regulators in the United States, Canada and Europe, but 700% in about 20 months ain't bad.
It's not too bad at all, is it? All right, Sean, what's the key overseas news this morning?
Well, Singapore is keen to become a financial centre for cryptocurrency-related businesses, bucking the trend of resisting the rise of digital tokens. The boss of the Monetary Authority of Singapore, which is the Reserve Bank equivalent, said rather than clamp down or ban digital currencies, it was better to introduce regulation to help manage risks. Singapore has a strong history in financial markets, and certainly cryptos aren't going anywhere. Probably a pretty good decision. Rivian, the electric vehicle manufacturer backed by Amazon, will debut on NASDAQ in coming weeks with a valuation of more than $50 billion. That would make it about the same size as Kia or Nissan, who have been around for many, many years, and it comes despite Rivian losing almost $1 billion in the first half of this year. Electric vehicles are hot at the moment. And speaking of which, it's been at least 2 weeks since I've mentioned Elon Musk's name, but I've missed talking about the big fella, the boss of Tesla. According to Bloomberg, Mr. Musk's wealth is now 3 times bigger than the greatest investor of all time, Warren Buffett. That's on the back of the incredible surge in Tesla's share price. And if you want that in numbers, Michael, it's $335 billion of wealth for Mr. Musk, to about $104 billion for Mr. Buffett. And just as an aside, Mr. Musk is now worth $143 billion more than the world's second richest person, Jeff Bezos of Amazon fame.
That is quite extraordinary. We've actually got a really good story about Elon Musk and his enormous wealth in today's newsletter as well, which you can find if you sign up at fearandgreed.com.au. But first, Sean, up next, we have the daily interview, and today you're speaking to Commonwealth Bank Chief Economist Stephen Halmarick.
Yeah, one of the best economists in the market. He runs the team at the Commonwealth Bank, which is obviously the biggest company in the country. We get his take on what the Reserve Bank said yesterday. I must say, Phil Lowe, the Governor, and Stephen Halmarick, the Chief Economist, don't necessarily agree.
That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It's Wednesday, the 3rd of November, 2021. Make sure you're following the podcast. Join us online on LinkedIn, Twitter, and Facebook, and sign up, as I mentioned, for our free daily newsletter at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.